Welcome to Equity and Ag, your daily recap of the stock market and agricultural futures. Let's break down what moved the markets today. It was a mostly positive session across the board for row crop futures on Thursday, with soybeans leading the charge higher on continued trade optimism ahead of President Trump's expected visit to China in April. Wheat caught a strong midweek burst, rallying off trendline support and fueled by solid export sales over the past several weeks, and that strength spilled over into corn as well. Meanwhile, outside markets were volatile. Stocks turned sharply lower late morning without a clear macro headline. Treasuries stayed firm following Wednesday's stronger-than-expected jobs data. The U.S. dollar held steady, and energy markets moved lower on rising U.S. crude and gasoline inventories. March corn futures gained 3 3/4 cents to $4.31 1/4, while May rose 5 1/4 cents to $4.41 3/4. March futures tested and held trendline support near $4.27, drawing in technical buyers. The next bullish target remains the 50-day moving average near $4.36.5, with the upper end of the emerging trend channel sitting in the upper $4.30 range. On the fundamental side, export sales came in strong at 81.5 million bushels, nearly double the previous week. Shipments were solid at 59.5 million bushels, though still slightly below the pace needed to reach USDA's increased export target of 3.3 billion bushels for 2025-26. Commitments remain 31% ahead of last year's pace, showing sustained demand. U.S. corn is now priced above Argentina, but still below Brazil and Ukraine, keeping us competitive in key markets. Soybeans continue to climb. March futures rose 13 1/4 cents to $11.37 1/4, marking gains in 7 of the past 8 sessions. The key technical target remains the November high at $11.63 1/4, while resistance continues to show up around $11.37, $11.38. The bullish driver? Trade optimism and speculation around potential China demand. But here's the caution. Old crop export sales hit just 10.4 million bushels last week, a marketing year low. Shipments were strong at 41.5 million bushels, but overall commitments remained 20% below last year's pace. USDA projects exports to fall 16% in 2025-26. Brazilian offers remain roughly $1 per bushel cheaper than U.S. beans, and their harvest season is now ramping up, typically a headwind for U.S. sales. However, murmurs of quality concerns in Brazil and the possibility of a trade agreement with China keep upside potential alive. Wheat had one of the stronger sessions of the day. March Kansas City futures jumped 15.5 cents to $5.54, closing above the 200-day moving average for the first time since mid-June. That's technically significant. The next major upside target sits near $5.86.5, the high close from last summer's rally. But to reach that level, wheat will likely need additional fundamental backing. Strong export performance and technical momentum are helping fuel this move, and that strength continues to lend support to corn. Disclaimer: this report is for informational and educational purposes only, and should not be considered financial or investment advice. Trading futures and commodities involves substantial risk, including the potential loss of principal. Always conduct your own research and consult with a licensed financial professional before making trading or investment decisions.